Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back again, everyone, to another edition of All Things Financial. What I wanted to talk about today, I've mentioned this in a number of different shows, and I'll mention it again today. There's a saying or a phrase that I had heard long ago, and it was the question, if you owned a goose, and I've brought this up on other shows, if you owned a goose who laid golden eggs, which would you insure first, the goose or the eggs? I bring that up in the context of financial planning because so many times I bring up on this show the breadwinner, the money earner, the earnings and the ability to earn earnings are the most important asset you have. I want to reiterate that today, even though what that means is ensuring yourselves in the ability to continue earning life insurance, disability insurance, life insurance to replace your assets and your income, disability insurance to continue your income, and again, preserve your assets. But in today's show, I'm going to talk about insuring the eggs. And what I mean by that is your car insurance and your home insurance. I want to talk about how to protect the assets you've already accumulated. I've talked in other shows about how to protect yourselves. And in today's show, and in next week's show, I want to touch on how to build a portfolio to insure your current assets, not your future assets, like we talk about retirement plans and retirement security, but your current assets. So I want to start today with on the car insurance. Most of you listening to the show on the radio are in your cars. If you're watching the show on the TV, on the videos that I have, obviously you're not. So for all of you who are listening and are currently in your cars, I kind of want you to brace yourself, put both hands on the wheel, make sure to pay attention to the road, no texting, and pay attention to this show because I'm going to ask you a question next that'll startle you a little bit as you're driving. And here's the question. If right now you in your cars had the unforeseen circumstances of someone, if you're in heavy traffic and in between parked cars on the side of the road, someone pushes out a baby stroller in between those two cars and you inadvertently and don't even see it, kill someone or kill that baby or disable someone, are you covered? Are you covered for enough? Have you protected your family with the coverages you've purchased on your car insurance? Or do you just shop for price? You keep both hands on the wheel and keep your eyes on the road because these accidents happen. And they happen many times through no fault of your own. It's just an accident. It's just something people couldn't predict. You're driving down the road and someone opens the car door right as you pass by their car. Guess whose fault it is? Yes, that's right, it's your fault. Guess whose fault that is if someone steps out in front of you because they are texting, walking across the street, not paying attention. That's right, it's your fault. So you are the one that's responsible for your family's security, not losing your home, not losing your business, not losing all of your assets due to a personal lawsuit. So the purpose of today's show is, yes, number one, to scare you into reality before it happens. I brought up about a year ago the case of an 86 or so year old woman who had hit a bicyclist. Now, you know she wasn't texting, but she hit a bicyclist, who knows why, from, I believe, behind, and It was about a $70 million lawsuit that came to her. Now, come on, picture this, folks. I've brought this up in other shows. You can live a lot of good days, and you're judged on only the one bad instant, when things can change that fast in an instant. So as you're driving the car right now, listening to this show, pay close attention. Can you answer my question? Are you covered? If you're covered, are you covered for enough? And are you with the right company? So here are the issues. Number one, we learn in risk management that some accidents are avoidable or preventable. You're going to say, no, they're not. And so do I initially, but some accidents are preventable. First off, there are many areas of risk management. Number one, don't get in the car. Well, as ridiculous as that is, sometimes you might take the T instead of taking the car to try to avert an accident, risk or probability of an accident. Other times you'll say, well, the T could wreck too. So we can't necessarily avoid risk, but we can manage risk or manage certain types of risks. Here's one. The light just turned yellow and you sped up to go through it. Now listen, the next light that turns yellow, I want you to stop and I want you to look on the clock and I want you to time how long it is from when you had to stop for the yellow light until the light turns green again. I think most intersections, you will be surprised, it is 60 to 90 seconds. It is 1 minute to 1.5 minutes, maybe 2 minutes at the most. There are some major intersections it would be 5. But I want you to do that at your next intersection. And then I want you to ask yourself, how much was that 2 minutes worth versus the increased level of risk of speeding up to go through it? And the potential consequences that could have had versus waiting the extra 2 minutes to resume your life. How much difference would it make to have arrived at your destination a grand total of 2 minutes earlier? Same thing with speeding. You're going 40 miles in a 25 mile an hour zone. Well, that's 15 miles an hour difference, which at 60 miles an hour is 15 minutes. But when you're only going 20 miles, 20 minutes at 40 miles versus 25, you might be saving 5 minutes. Do the math. Is it worth the increased risk of possibly losing your home and all your financial assets, of driving unsafe, or even getting the $200 or $300 ticket? So yes, this is a financial planning show, but today's show and next week's show is designed toward protecting and preserving your assets. So what I want you to do is get back to this question: are you covered? Is it worth texting, which is illegal? Could that invalidate a claim? Could that invalidate your insurance company paying a claim, a major lawsuit? Have you ever thought of that? You need to think of that. So I want you, what about not wearing your seatbelt? Those things are illegal. And in Pennsylvania, you need to evaluate, are these risks worth it? That I might be invalidating all of my coverages on my car insurance should I have an accident? Have I given the company a loophole out or a fine print argument out of the being able to deny this claim because I was driving illegally? Don't take the chances, folks. We're here to protect your assets. Financial planning is about making the most of what you already have and making the most of what you can save in the future. Back to the question, are you covered? You've just injured someone, you've just killed someone, you've paralyzed someone. No one wants to think about it. I hope both hands are still on the wheel and eyes are on the road as you're listening to this show, because I'm going to go through the coverages you should have, and when you get home, I want you to compare them with the coverages you do have. And then I want you to ask yourself the question, why have I had these coverages I now have for all of these years? Why hasn't anyone told me otherwise? It took me listening to this radio show to wake up to some alternative coverage issues no one's ever told me about. And when you've shopped insurance, but you've shopped it for price. You've not, your agents that you're dealing with are not going into the quality of the coverage and the quality of the companies as much as they are, we can get the same thing as you have right now cheaper. Well, what if the same thing you have right now isn't very good? So let's run through the coverages. Number one, we're buying car insurance. The first question I have for you and everyone is, why? What are you buying it for? Why are you buying it? Well, because we have to have it, people will tell me. And I'll say, no, you actually don't. You just have to have very minimum limits. You don't have to have anywhere close to what you have. Why are you buying the insurance? Why are you spending all this money? Most people will tell me, well, I want to make sure that if I'm in an accident or hurt someone, I don't lose my house. I say, okay. What types of accidents are you most concerned about then? The small accidents or the large accidents? And they'll say, well, the catastrophic accidents, the large accidents. And I'm asking then the ones that if they happened and you didn't have coverage might wipe you out? And they'd say yes. And I'd say, so you mean if you killed someone, maimed someone, paralyzed someone, or a family, those are the types of claims that you first are why you're buying car insurance, to protect yourself against, and transfer that risk to an insurance company to pay those lawsuits for you? And they'll answer me yes. So then I'll ask them, and I'll ask you, everyone listening to the show today, how much coverage will you buy? And people will reply with, how would we know? How do I know? You're supposed to know that as the agent. And I'll say, I don't know. And you don't know. Because the accident didn't happen yet, no one knows. So the best we can do, I think, in my opinion, is picture some of these things we hope never happens, but see through the news that it is sometimes happening. A car goes out of control, the brakes fail and we can't prove it, or we lose control of the car, or someone else does and hits us head on. But those issues, how much coverage should we be buying prudently? Because we don't know how much it would be, but we know how much it could be. So we say, well, we're trying to protect all of our assets from being lost if it's our fault. So I'll say, well, how much would you be concerned someone would sue you for or could sue you for? And they'll tell me millions. And I'll say, well, pick a number without going unreasonable. Are we talking 1 million, 5 million? Most people will say at least $1 million. I'll say there is no right answer, and I'll reiterate that to you. But wouldn't all of you agree who's listening on the radio right now while you're driving a car, or who's watching on the show before you get into the car the next time, that you want to protect and arm yourself with enough coverage that if there is a claim, you don't have to lay in bed sleepless nights, night after you've had an accident that was considered to be your fault, but it wasn't on purpose, it was just an accident, that you might lose your home over. Those restless, sleepless nights, how much coverage limit would you need to buy to make yourself be able to say, I don't know how much this is going to be, but I've at least purchased an adequate enough limit that I feel I've been responsible enough that it should be enough to cover most major claims. And that I was responsible not only to myself, you would say, but to the other party I injured or the other family. So I want you to consider buying enough limits, not only to protect yourselves, don't only think about yourselves, but think about being responsible for the party or parties you may have injured. And how much limits would you need to buy to feel comfortable that you're providing for that family who, through no fault of your own, it was a true accident, let's say, that you've been responsible to that other party. Maybe it's in today's world $1 million, $2 million, $5 million. You have to choose the limit, and everybody is different. And then I want to ask you the questions. We'll go down through the rest of the coverages, right now that I want you to also list. But I want you to write down right now, or mentally note if you're driving in a car and can't write it down, what the limit, the responsible limit you feel you should have, whether you have it or not. Write that down now for those of you who can, and those of you who are driving, think of the number. Believe me, you won't forget it by the time you're home. Think of the number that you think's the responsible number you think you should have. You know you don't, but from now on, you want to at least make sure you're covered for up to that amount, okay? Now that you have that number down, I'm going to share a secret with you. When you get home and you look up your coverages, because I'm going to have you look and compare, I'll give you a little homework assignment, your current coverages when you open your policy up. How much are you covered for? And then I want you to look at the number you think you would like to be covered for. You knew you weren't, but how much you should be covered for. What most of you will be covered for is 100, 300. What that means is $100,000 bodily injury limit per person, $300,000 bodily injury limit per accident, cumulative per accident. That's what most people have in my experience. To me, that's the generic limit. If you've never asked anybody, that's what the agent is going to choose for you in my experience. So shame on you for not asking, and shame on your current agent for just putting on a standard limit without asking you the questions I just did. So shame on you both, but there's still time to correct it if you haven't had the accident yet. So drive safely between now and when you get home. And no, don't call your agent right now and change the limit while you're driving. When you look at the difference from 100 and 300, you will see your number that you wrote down or you thought of was 1 million or 2 million or 5 million. So when you call your agent, or better yet, call us because your agent hasn't done their job, and let us reevaluate all your coverages, you will hear an answer that will surprise you. Your question will be this: how much will it cost to increase my limits? I know now that I know what I have for the first time. I don't have enough. But I can't afford much more because my insurance is already too expensive. And I'll get to that. And if you give us a call, I'll show you how to fix that. But my insurance is too much. But it would be even more too much to have an uncovered claim or an inadequately covered claim where I could lose everything I have, and that's way too expensive. So how much is it to increase it? You will be surprised to hear this answer from us. You can increase your car insurance policy up to no more than $250,000 per person, $500,000 an accident as a rule. Some companies, and we do shop companies, we're independent, have $500,000 per person, $500,000 per accident. But again, if you look on what you wrote on that sheet of paper or thought about while you're driving, neither of those limits is anywhere near the million or more that you wrote down or that you thought to protect all of your assets. So your question first will be, how do I get to the million? And your agent will tell you, or we will, you have to buy a separate policy in above and beyond your car insurance. So you first have to take your car insurance policy to the maximum limits of allowable, which again in most cases is up one notch to $250,000 per person, $500,000 an accident. And you'll say, well, first, how much will that cost? I first have to buy the maximum limits, and then we inquire about insuring further on a separate policy above and beyond, which is called an umbrella liability insurance policy, and I'll get to that in a minute. So you will hear the response when you ask how much will it cost to up your coverages to $250,000, $500,000. The price per car might be as low as $25 per vehicle. That should be shocking. So you ought to scold yourself for never having asked that question before, and scold your agent for never having brought up the answer to the question that you never asked before, if what I just said is correct. So if it's only roughly $25 per car, why in the world would we have not had this before? Because you never asked? That's not fair enough. Because it was never brought up to you by the counselor that you're trusting to watch over your family security. Okay, wherever the blame goes, it stops now. Because you're listening to the show, you heard what I said, or you're watching the show, you see what I'm saying, and you can fix it. You can't afford that difference. So pick up the phone, find out the answer to the question. The second is a little more complex, but not much. Hey, how do I get to the million? How do I get to the 5 million or 3 million or 2 million? How much is all that? It must be very expensive, right? So you find out from calling our office or elsewhere that an umbrella liability policy is based on how many drivers you have, how many cars you have, and yes, what type of home or how many homes you have, whether you have boats, motorcycles, etc., or other properties. A typical traditional umbrella liability, get this, on one home and 2 cars, all adult, 2 adult drivers, a married couple, let's say, is anywhere from $150 to $250 for the whole year for a $1 million additional limit over top of your car insurance. Did you just hear me right? You're asking yourselves. It couldn't be only $150 to $200, maybe $250 tops, could it? $20 a month? $18 a month? And we have an additional $1 million coverage over top of if I have that accident, versus right now we're covered up to $100,000. Now again, that $25 per car limit to increase from $100, $300 to $250, $500, that might be only every 6 months or even only once a year. And then here we are, an additional $200. You may have the whole issue solved. Do you see how profitable it was listening to the radio today? I can show you ways to save that same amount of additional premium elsewhere on your car insurance policies, giving up far, far less, just certain convenience issues, and gain that additional whopping catastrophic level of coverages to protect you much better in catastrophic and possibly devastating lawsuits, and give up far less minor convenience coverages and make up that difference and end up possibly with overall premiums very close to the current premiums you're paying now. Yes, there are ways to do that. We refine coverages. Why? Because we open up and change the discussion. We change the discussion to quality of coverages and quality of protection, and what quality of companies and what quality of agents and advisors we're using to serve and account for the needs that you have, instead of the do-it-yourself, keep shopping for cheapest premiums you can get, and continue exposing yourself to risking losing all of the assets that you've currently built through not knowing any better, and the advisors you're choosing, for whatever reason, aren't helping guide you to these types of questions. So they're keeping you in the zone, and so are you, of cheap, 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 cheap. Whatever I have, I don't want you to change anything. You may be forcing the issue. I don't want you to change anything. Just match apples for apples. I want to know what's cheaper. You're making a tremendous mistake when you do that. So that's why I put out the radio show, folks. I put it out starting 6 or 7 years ago in the TV to help people change habits. Thanks again for tuning in to another edition of All Things Financial. I hope this helped. Give us a call. I'll be back again next week, and keep tuning in.
Securities and investment advisory services offered through SagePoint Financial Inc., member FINRA SIPC, and registered investment advisor. Insurance services offered through Driscoll Insurance and Financial Services Inc., which is not affiliated with SagePoint Financial Inc.